Welcome to Alan Berry Reports TV. I'm your host, Alan Berry Laboucan from AlanBerryReports.com. Today we have a new installment of our In the News show. This is the program where we talk about resource companies with recent developments. On today's show we have three companies to talk about. Two of those companies are focused on gold, and the other is a uranium-focused company. We'll open the show with some commentary about bullish trends that we're seeing for several commodities and, of course, resource stocks. Before getting started, we always like to send out some thank you messages to those that are important in us being able to do these shows. First of all, we use YouTube.com as our primary website to produce and broadcast these shows so that you can watch them at your leisure. They have a great website over there, the folks at YouTube, and anybody's interested in doing online shows, we highly recommend them. Also, if you're watching this show on our website at AlanBerryReports.com and you look to the left and right of me, you'll notice that we have some banner sponsors. Those banner sponsors are really important in us being able to bring these shows to you. If you want to do some homework on those companies, all you do is we have the banners directly linked to those companies' websites, and on their websites they have plenty of information about their projects, the people involved, the news from their work that they're doing, and it's a great place to start your research. And again, they're really important, this kind of sponsorship for independent media like we have here at AlanBerryReports.com, and so you can check them out on their through their banners on our websites. That'll take you to their websites. And of course, to you, the viewers, you give us an audience to talk to about commodities and resource stocks and the markets, and we really appreciate you tuning in. So thank you as well. Today, we'll get started with some commentary that we wanted to talk about. Lately, we've been sort of talking a lot about the difficulties that we're having trying to find new companies to talk about on the shows. This is important for several reasons. One of those key reasons is if exploration companies and those that find new discoveries and then move them towards economic evaluation and then on towards production, if they're having a hard time finding and developing new projects, then that has a long-term effect on the supply chain. We saw this for much of the 80s and 90s. There was a severe underinvestment in exploration and new development, and this is why when the strong demand from emerging economies started to happen in the early part of the 2000s, it has a lot to do with, you can't just have demand. If the supply is equally as strong, then the prices aren't going to go anywhere. In the case of a couple decades of underinvesting, it had really weakened the supply chains. Then you have all this strong demand, and that's why we've had a 10-year bull market for commodities. Now, going forward from here on, 2011 and beyond, the things that we're seeing from the new investment that came in the sort of the around 2004 and beyond, it was helping find new projects, and we picked a lot of companies during that period. But since then, in the last few years, since the economic calamity of 2008, we've been seeing that there is less funds out there for fewer companies, or there's a lot of funds out there, but it's going to fewer companies. And so there's not a real big wave of new discoveries happening in the last year or so, and this has a big impact going forward. We think that it tells us that in the 5 to 10 year window, the trend of weakened supply chains is going to continue, and this is very bullish for commodity prices. Now, what we're really excited about is the fact that in the last 5 or 6 years, we've been able to put together a really strong group of featured companies that we talked about in our email newsletter or here on this show. And these companies are doing really great work. They've got great projects, many of them. They're advancing the discovery. They're making new discoveries. They're advancing those discoveries. And the group of companies we follow do put out a lot of work. So there's plenty to talk about on the show, but we're always trying to bring new companies along, and that's where it's getting difficult. So that's one issue we wanted to talk about today. Another issue is with the small amount of companies resource companies that have high quality discoveries or development projects. There is not a lot of those out there. So, but yet there's a lot of new investors coming into the market, and so with all that, the new investors and mining companies, for that matter, are chasing after a smaller group of companies, and this is very positive for the price of high quality resource companies that have good projects. In fact, just yesterday, one of our featured companies that we will talk about later is one of the companies we're going to talk about today. They recently made a takeover offer for another company that we've had on our radar screen. We haven't talked about this other company on the show, but we've been following them, and we're going to talk about that takeover. But we think that what is happening is there's less companies out there for a growing audience of investors and mining companies to chase after. This is pushing prices upwards, and also will keep the takeover market very healthy. And then another thing we're noticing is that on the uranium stocks, they're looking very oversold. Supply-demand fundamentals are very bullish, based on the reactors that are currently built, and we're not this mining sector is not producing enough to meet the demand for those reactors, let alone the construction of new reactors. And this trend, this bullish trend for commodity or for uranium is in very good shape. Basically, the bottom line is the world needs nuclear energy for base load energy production usage, and the future supply demand imbalance is only going to increase as more reactors are built. This will drive the prices of uranium much higher. Uranium stocks have been beaten badly since the Japanese earthquake and the situation with the nuclear reactors over there. This is it's almost like the market is trading the uranium stocks as if the uranium price is plummeting, yet it's not. And so that creates a very bullish situation. We think that right now uranium stocks are a great place to look for bargains, and we're going to be talking about one today. So now we're going to move on to our, that's a wrap on our opening commentary. Now we're going to move on to the first company we're going to talk about today is Premier Gold Mines. And on the disclosure, we are shareholders of the company. They're also a banner sponsor on our website. Again, if you're watching the show on our website, you can find Premier Gold's banner on our website. It's directly linked to their website where you can go do a whole bunch of homework. Our past coverage, they are a featured company in the Allen Berry Reports email newsletter. We started coverage of them on October the 3rd, 2006, which was our 9th edition. And then we've also had them on several of our past shows here. And the first time we had them on was our April the 27th, 2010 show. If you'd like to find our past reports, just look above me on the website at the report section. In there we have all the past reports, including that 9th edition. And you can either read it online or download it in a Word file to print off and read at your leisure. And then if you're looking for our past shows, just look above me at the shows section. In there we have a directory of all of our past shows. We include the dates, an overview of which companies were talked about and the topics. And then we have a link to to where you can go watch those shows. So if you want to look for that April 27th show, that's a great place to do it. Then their website is premiergoldmines.com. That's premiergoldmines.com. As I said, we've talked about them several times on our past shows. The most recent time was on our February 2nd, 2011 show. Again, look above me at the show section. You can find that February 2011 show, February 2nd, 2011 show, as well as all the past shows we've talked about them on. Since then, they've had 2 press releases that we're going to talk about today. I've just got their website up here, and the first one we're looking for is the February 9th release. And the headline from that is Premier provides hard rock exploration update. And then they mention that they are pleased to provide a summary of the company's hard rock exploration program and update on the 2011 exploration campaign. They mentioned that since the acquisition of the core part of the project late in 2008, numerous successes have been realized, including new discoveries and the delineation of significant mineralization in both open pit and underground style zones. Highlights include early in 2010 a large resource was announced based solely on open pit style mineralization. This resource is currently being updated, including underground style mineralization, and is expected to be completed in Q1 2011. Drilling has expanded the footprint of the North Zone, which has a historic production grade of just about a quarter of an ounce per ton gold, more than 300 meters below the bottom level of the hard rock mine, where it remains wide open for expansion. Then they talk about some of the highlighted drilling from their F zone, very nice grades, 7.92 grams per ton gold, so pretty much a quarter of an ounce there, over 114 meters. And several other thick intersections of high grade like that. They talked about their new discoveries were made on their K zone, located just below the F zone. Drilling intersected mineralization in the SP zone over a plunge length of more than 3.5 kilometers. Then they have a bunch of other key details, their resources, some drill hole intersections. You can find all of that in that February 9th press release. So then the next one we're looking for is their March 30th, 2011 press release. In that one, the headline is Premier intersects high-grade Carlin gold, 0.25 ounce per ton gold across 40 feet. They go on that Premier announced initial drilling at the company's 100% owned Saddle project located within the Rain sub-district of Nevada's prolific Carlin Trend has intersected high-grade gold mineralization. Premier is bringing in additional coring rigs due to initial results and an anticipated approval of a plan of operation permit in mid-April to accelerate drilling productivity. They mentioned that the first hole that intersected the Saddle deposit, SA003, returned a quarter of an ounce per ton gold across 40 feet, which works out to 8.46 grams per ton gold across 12.2 meters. Included in that was 0.31 ounces per ton gold across 22.9 feet, confirming Premier's belief that the Saddle deposit represents one of the most prospective high-grade undeveloped gold deposits in North America. Then they had a table with the drilling results. Later in the press release, they give you a bunch of details about the work, the exploration work that they're doing on the Saddle project in Nevada. And then later on, there's a quote from Ewan Downey, who's the president and CEO of Premier Gold Mines, and he stated, and I quote, "The Saddle deposit is one of the highest grade undeveloped gold deposits in the U.S. and yet remains one of the most undervalued projects in Premier's portfolio. We are in the process of accelerating our program at Saddle in order to advance the opportunity towards development." End quote. So that's the details from that press release. Just going to move some things around. So some of the reasons that we like the company, Premier follows a game plan that is well known in the mining business, and it's sort of what we also do with our reports in general, is they look for projects in well-known mining districts in mining-friendly countries and districts. This is, first of all, being mining-friendly is important because you want to be operating in a place where you can get permits to mine if you find something. Secondly, it's being in a well-known region where other mines have been found. Often a great place to look for a new mine is in areas where there's old mines, and that's what that's their plan of attack. And they've done this. Originally we started following the company because they have a really great a group of projects in Red Lake, Ontario. Red Lake, Ontario is one of our favorite camps. It's got there's plenty of very high grade deposits in that area. That tends to catch a lot of people's attention. Red Lake is one of the best places in the world to look for high grade deposits. And so they've got a great situation there. Then since we started following them, they also added this hard rock project up in the Geraldton Beardsmore area. Again, this was an area that in the last few years has garnered a lot more attention. And again, Premier went in there. They went in and grabbed projects that there had been historical mining many, many years ago. They started putting their exploration expertise to work, and now they're finding, not only are they finding lower grade open pit type targets, they're also finding high grade deeper targets. And so the Hard Rock project and their projects in Red Lake is what a lot of people are focused on when they look at Premier. But now they've got this project down in Nevada that's just starting to emerge. I think they only grabbed it in the last 9 months or so, and now they're starting to get some results from their early drilling exploration on it, and it's returning very good grades. So, the formula that they follow, it works. It's sort of the formula we follow in our reports. Premier is a great example of that. If you want to do some homework on the company, great place to start that is on their website that we mentioned earlier, premiergoldmines.com. And I think if you do your homework, you'll see the quality of their projects and why we like the company so much. So that's a wrap on our chat regarding Premier Gold. The next company we're going to talk about is New Gold Inc. On the disclosure, we're not shareholders of the company. Our past coverage started in our Allen Berry Reports email newsletter. We started coverage of them on July the 28th, 2008, which was our 18th edition. We also have had them on several of our past shows. We started the first time we had them on the show was on the August 18th, 2010 show. If you're watching the show on our website at allenberryreports.com, just look above me. You'll see a report section. In there we have all the past reports, including that 18th edition where you can find our coverage on New Gold. And you can either read it online or download it in a Word file to read at your leisure. We've also, for the shows, you just look above me at the shows section. In there we have all of our past shows, a directory. You can find that August 18th, 2010 show, plus all the other shows we've had them on. And that's a great place to find the shows. And then their website is newgold.com. That's newgold.com. This is another company that we've had on several of our past shows, as I said, and our most recent coverage of them was on the February 16th, 2011 show. Since then, they've had two press releases that we're going to talk about today. The first one we're looking for, I'm now on their website. The first one we're looking for is the March the 3rd. And in that one, the headline is New Gold announces fourth quarter and and 2010 year-end results with increased gold production at lower costs, resulting in a 131% increase in cash flow from operations during 2010. Some of the highlights that they talked about: fourth quarter total cash cost per ounce sold net of byproduct sales decreased to $354 per ounce from $472 per ounce in the same period in 2009, representing the lowest cost quarter in the company's history. Quarterly gold production increased by 11% to 124,000 ounces from 111,000 ounces in the same period in 2009. Fourth quarter cash flow from operations increased by 62% to $88 million from $54 million in the same period in 2009. Just got to move down here. 2010 total cash cost per ounce net of byproducts decreased by $37 per ounce to $428 from $465 per ounce in 2009. 2010 gold production increased by 27% to 382,000 ounces from 301,000 ounces in 2009. 2010 cash flow from operations increased by 131% to $182 million from $79 million in 2009. New Afton 2010 underground developments of 3,873 meters beat the target by 11%, and $491 million of cash at December 31st, 2010 increased by $219 million since December 31st, 2009. Then they have a whole slew of the information about the recently reported quarter. What we really like to see is when companies, gold producers, are bringing down their costs and increasing their production, and then they've got new production in the pipeline. These are all real key things that we like to see, especially when they're sitting on a lot of cash. That cash gives them room to make acquisitions, and in fact, the next news release we're going to talk about is in that area. And so they've got a lot of good stuff happening in the full year for 2010. And again, you can find all the details in their press release on their website. So then the next new press release that we're looking for was yesterday. The headline is New Gold agrees to acquire Richfield Ventures Corp. Adds gold project in British Columbia. They mentioned that they announced a definitive agreement whereby New Gold will acquire, through a plan of arrangement, all the outstanding common shares of Richfield. Under the terms, then they give the Richfield shareholders will get 0.9217 of a New Gold share for each Richfield share. Then they give you some more details about the offering. They talk about some of the transaction highlights for New Gold. It adds a large gold asset in British Columbia, where New Gold is well advanced, bringing its New Afton project into production. Adds an established attributable gold resource base of 1.8 million ounces of indicated mineral resources and 2 million ounces of inferred mineral resources with significant exploration potential. Timeline for development that matches availabilities of New Gold's proven mine building team. Ability to fund developments from internal cash flow. Tax synergies with New Afton. Minimal shareholder dilution of approximately 10%. Then they mentioned there's a quote in here from Randall Oliphant, who's New Gold's executive chairman, and he stated, and I quote, "The acquisition of the Blackwater project is an ideal fit with our goal of continuing to enhance value in jurisdictions where we already have a strong presence. This is an exciting gold project that we anticipate could significantly increase our gold production base at competitive cash costs and in the years ahead." And end quote. And so that's all the key details from their recent press releases. Some of the reasons that we like New Gold is a company that we look at. one of the areas that is underserved in the mining sector is the middle tier companies. You have your exploration companies, and then you have your large major mining companies, and in between there's your middle tier high growth companies that are shooting towards trying to grow in their size as a middle tier and hopefully grow into a major in the future. And in the case of New Gold, why we really like the company is they're a gold producing company with a really good production profile. They also have new mines coming into production. In their case of their New Afton mine, now they've got a new acquisition of this Richfield project that will be moving forward as well. There's a key philosophy of the company seems to be that they want to keep their cash costs down, increase their production, and increase the cash they have on hand. And this is a really good formula to grow from a smaller middle tier up into a larger middle tier and may possibly into a major in the future. And we really like that overall big picture with New Gold. That's why we follow them so closely, and we really like the recent developments. They're moving ahead they got good news coming out of their production. They got development work at their New Afton mine that's going ahead very quickly, and now they've got new acquisitions and a lot of cash. Really good combination. If you want to do some homework on the company, again, a great place to do that is on their website at newgold.com. That's NEWGOLD.com, newgold.com, and you can find plenty of information. I think as you do some homework, you'll see a lot of the attributes that we talked about today in this company, in their news, on their website. So that's a wrap on our chat regarding New Gold. The third company we're going to talk about today is Fission Energy Corp. Fission, on the disclosure, we are shareholders of the company. Our past coverage, they're a featured company in the Allenbury Reports email newsletter. We started coverage of them on the April 6, 2008, which was our 17th edition. We also have spoken about them several times on past shows here on the website, and we started that on September the 30th, 2010. If you look above me on our website at allenburyreports.com, you'll see the reports section. In there we have all the past reports, including that 17th edition, and you can either read it online or print it, download it in a Word file, read it at your leisure. Or if you look above me at the shows section, we have all of our past shows in there, including that September 30th, 2010 show, and a link to go watch it, and all the you'll find all the other times we've had them on our shows in there as well. Their website is fission-energy.com. That's FISSION-ENERGY.com. This is another company we've had on several past shows, as I mentioned earlier. Our most recent time was on our February 16th, 2011 show. Look above me at the show section to find that show. And since then, they've had a few press releases out that we're going to quickly work through. On February the 22nd, I'm on their website now, and I'm just pulling up their news release section. On February 22nd, the headline was, Fission expands the J Zone to 203 meters. Mineralization extended at new PKB discovery west of Highland. They mentioned that Fission and their partner KEPCO announced that recently completed vertical step-out drilling at its Waterbury Lake project in the Athabasca Basin has expanded the J-Zone uranium discovery at its eastern and western margins. In addition to identifying more unconformity-related mineralization at the newly named PKB zone within the Discovery Bay corridor, 338 meters to the west of the currently defined J-Zone boundary, Fission has now successfully increased the east-west mineralized strike length of the J Zone from 120 to 203 meters, or by 69% since drilling resumed in January. Since the company's last update on February 7th, 50 new drill holes have been completed, 10 to test the J Zone and 5 on the PKB drilling. Discovery drilling is continuing with 3 rigs. So they had a good exploration update there with some results, including some preliminary testing of the drill core that's now in the lab, and in fact it's in one of the results from that, or lab results from that, or in one of the few other press releases we're going to talk about. But this gives you a good idea of what's going on with their exploration work. Then the next news was out on March the 1st. On that one, Fission Energy... Oh, sorry, that wasn't the one that I wanted to talk about. There it is. Oh, pulled the wrong one up again. On March 1st, Fission, the headline is, Fission discovers new mineralization near the unconformity 1.3 kilometers west of the J Zone. They go on that they announced the further exploration drilling at their Waterbury Lake project in the Athabasca Basin has identified new mineralization 1.3 kilometers west of the J Zone uranium discovery within the Discovery Bay corridor. Then they give you a bunch of details about this recent big step-out drilling and a new zone out there, and it's really good. You can get a good idea what they're working on as far as that exploration success. And then on March the 29th, the headline is, Fission intersects 14.5 meters of 7.84% uranium on 60-meter step-out. Now this, they go on that they announced the J Zone assay results for 14 previously completed vertical step-out holes. Again, that high-grade intersection of 14.5 meters of 7.84% uranium. Included in that was a 2-meter intersection of 46.15% uranium. So really just incredibly high grade uranium in those intersections. Then they give you a whole summary of the drilling results that they found, and again a table with the various different grades. And again, you can find that all on the company's press release website in their news release section. So that's all the key information from the various different press releases. Why we like Fission is we're very bullish on uranium long term. It's been a long period of underinvestment that has where the supply chain is very weakened, produces only about 60% of the demand that from the current reactors. That gap has been made up by decommissioning nuclear weapons. That is a finite source. It will not continue for much longer, and in the meantime new reactors are being built, and just not enough uranium being produced. And so they are in one of the best jurisdictions in the world, in Saskatchewan, in the Athabasca Basin. This is a very high, why it's such an exciting place is the high grade nature of the deposits out there, phenomenally high grade in some instances. Fission has a really well located project in an area where there's been a discovery by a major mining company. Then right next to them also is a discovery by Hathor, another company that's a featured company in our reports. We've talked a lot about them. And then Fission has a large project, a large piece of ground there as well, and now they're also getting really good results with their drilling. And so they're in the right area. They're in a really good area, a really good region in the case of the Athabasca Basin. They're finding they've got a really well situated a piece of ground, and they're getting really good results with their drilling. This is a really good combination. They are an emerging company that has is having exploration success and looks to continue that in the future. Great place to do your homework is on their website at fission-energy.com. And I think as you do your homework and check out their various projects and their news releases, you'll start to get a sense of why we follow the company so closely and think that they have a good chances for future success with their exploration. And so that's a wrap on our in the news section, or in the news part of the show. Before closing, we'd like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and any efforts you make to let your friends that follow the markets know about our website, our reports, our shows would be greatly appreciated. We also greatly appreciate you taking the time to watch these shows. We know that everybody's very busy these days, and we strive to produce a show that saves you time and brings you helpful, high-quality information. The next show, in a couple days, we're going to be doing another In the News show. We'll be talking about some recent developments from some resource companies with high-quality projects. The best way to follow all of our work is to subscribe to our email. If you're not already on our email list, there's no charge to be on it. If you look above me on the website, you'll see a subscribe section. Just go in there, fill out the information. Again, there's no charge for it. And we send out updates whenever we're doing shows or reports or public speaking engagements, TV appearances. It's a great way to follow what we're working on, and for no charge. We'll keep you updated. We hope you can join us for future shows. You can find all of our work on our website at allenberryreports.com. We'll see you soon, and have a great day.